Are you thinking that you need 20% down, 3%, 5% down just to be able to buy a home? Today, we're going to be talking about how the new program that just got released will allow you to purchase a home with 1% down, depending on the county you're trying to purchase and how much of a home you're trying to buy. Today, we're going to break down how the program works, how you can use just 1% down. Keep in mind, this could be your way in, but this program also does come with quite a bit of regulation as to what homes they'll allow you to purchase, income limits that come along with it, a maximum to their money. So they will only allow you 2% up to $7,000, depending on your county. I am Elizabeth for a bilingual mortgage broker, and my team is licensed in over 40 states. I specialize working with first-time home buyers with FHA, VA loans, including Spanish-speaking families. When you're looking to make your next step and determine whether you're ready to buy a home, call mortgageliz.com. Schedule your time with me today. Now let's go over the basics of this program. This is based off a conventional loan with Fannie Mae and Freddie Mac finance. The conventional 1% down program is conventional. FHA guidelines allow you to spend more and have different interest rates than what you will have on a conventional loan. Mortgage insurance is quite a bit different on FHA versus this program at 1% down. As a mortgage broker, we work with many different lenders. This conventional 1% down program allows you to go off of just conventional guidelines, Fannie Mae and Freddie Mac. If you are planning on utilizing a program of FHA, VA, USDA, or any of the non-QM out of the box programs, this program would not be able to be connected with it. The conventional 1% down program allows the homeowner to receive 2% up to $7,000. It's never more than $7,000 coming from the investor UWM. 3% down, typical on a conventional financing as a first time home buyer. This program does not require that you take first time home buyer courses, but if everyone on the application is a first time home buyer, then you would have to take a course to obtain this financing. The 2% up to $7,000 is not a second mortgage and is not required to be repaid. There's not going to be an additional lien on your property once you obtain your brand new key. You would only have one mortgage, which would be the 97% of the home loan. We're going to be breaking down two different counties where this could possibly work, but then also breaking down the actual payments and the income that come along with those requirements to this program. Within this 1% program, it also has additional restrictions. It does require that you are going to be living in the residence. It does have to be your primary residence. You are not allowed to have any non-occupying co-borrowers. While you are required to live in the residence, this is only for single unit homes. This cannot be used for manufactured homes, 2, 3, or 4 units. It has the ability of being able to use for single family and then also condominium or even townhome. Now, this program does only go up to the conforming loan limit. So it will not go up to the $1 million amount for San Diego County because obviously there's also income limits that are required for this actual program. This program is available if you have a 620 credit score or higher. Everyone on the application has to have a middle credit score of 620 or higher, not just the primary borrower. You are not required to be a first-time home buyer either. We're going to check out both Freddie Mac and Fannie Mae. What we're looking at right now is actually Freddie Mac. With Freddie Mac's site as well as Fannie Mae, you will find that the income limits for 50% AMI, area median income, 80%, 100, and then 120% are relatively the same. There are those one outliers where they're not exactly the same on their income limit. So what we're going to do right now, we're actually going to pick a county. We're going to do San Diego County first. Once we click San Diego County, it'll give you this notice, and then you'll see the income limit for San Diego County was 130,800. However, we're going to go off of this one right here, which is the 80% area median income, and that is 104,640. So a lot of us that live in San Diego County, we're going to be looking at that and be like, that's not a lot of money to be buying in San Diego County. Being realistic is that it's giving you $7,000 that you don't have to pay back. Down here, you're going to see conforming loan limits. These are not the loan limits that are allowed within this program. San Diego County, we're going to go San Diego County. As we see here, the income limit for the county here is 104,640 on this program. This would be the income limit for the Freddie Mac program. As you can see, the income limit for both programs are exactly the same. Now, if we look at Riverside County, that will be fit for the income and be able to almost get to all of that 2%. If we do that, you're looking at 80% area median income at 83,100. $20. This program is not just limited to California, but we're picking out a couple counties that this could be eligible for. Now we're looking at Imperial County, 80% area median income, which is $58,480. If we looked into Orange County, we would see that it's 90,880. And then if you're looking into Yuma, Arizona, you're looking at 60,960. Remember, we are licensed in over 40 states. This link to Fannie Mae as well as to Freddie Mac will be inside the description so you can figure out whether you meet the income limits too. There are income limits and you cannot make $300,000 and utilize this program where they help you with up to $7,000. If you're trying to see whether you qualify, I recommend scheduling a time with us so we can figure out whether this best fits for you. It is possible that this 1% down program doesn't work for you, or there's other programs that could be better fit for you that actually help you with more money. Down payment assistances, first-time home buyer programs, those are all very different. No two individuals are exactly the same, and that's why there are so many different programs. We discussed what the income limits are at 80% area median income. That is the maximum allowed for this program. Now, with this income, how much could you actually purchase of a home? When you're trying to purchase a home, there are additional things that come into play. You need to put in your down payment. It's a conventional loan. It assists you with up to $7,000. The program is set to do 3% down. You cannot put more than 3% down to utilize this program. It has to be at 97% financing. If you end up purchasing a home that is higher in price, but you are still landing at that 3% down, you would still be able to receive $7,000. It still has to be under the conforming limit for the county that is already set up. And it is the conforming limit, not the high balance loan limit. Now let's go over some numbers. If you were to buy in San Diego County or Riverside County, how would these numbers break down? What your monthly payments would be, what the maximum purchase price is going to be, and how much is needed out of your own pocket. I did not add any seller concessions, meaning there's no seller credits. If the seller happens to assist you with additional money to help you pay closing costs, everything we're reviewing would be lower. This quote is based off of June 13th, 2025. Remember, this is just an estimate, not an offer to land. It gives you the options and the numbers so you can figure out whether this is an option for you. Now, let's talk about Riverside County. $350,000 is what I was currently calculating. We are going to be going into Zillow. That way you can see, is this even realistic? Where could you find these types of homes to only have to put 1% down? At a purchase price of $350,000, this is $10,500. The 3% down that you're going to need to put down. However, remember that this program helps you with up to $7,000. So 2% or 7,000, never exceeding 7,000. That's going to be the final loan amount of $339,500. So the rate at 6.875, APR is 8.505. This is a 30-year fix on a conventional financing. The monthly payment would be $3,009.19. That monthly payment includes your principal interest, taxes, insurance, and the mortgage insurance. The mortgage insurance of what we did right here is actually based at a credit score of 620. So if your credit score is higher, your mortgage insurance would be very different than what we're looking at right here, because the credit score would actually determine that you're going to get a better rate for the mortgage insurance, meaning that you pay lower amount on a mortgage insurance. So this amount of a monthly payment of $3,009.19 does only include what you see on the top. However, it does not include any HOA, property taxes that are in addition to the regular taxes. I have not estimated those numbers in these calculations. Now, if you were to go into further depth as to what you would need to close if you did this exact loan in Riverside County, your down payment is $10,500. The assistance of this program would be $7,000. The bottom line amount would be $24,973. The difference between the money that they're helping you with plus the actual amount that you need is $3,500. The difference of the $20,000 we are estimating in regular closing costs. Why is this so high? One, because we like to pad numbers. I'm not a fan of giving you a whole bunch of surprises. This does include your property taxes and your insurance. So being able to set out your escrow account so that way you're able to review and have the lender pay for that for you when it's due. If you want to have it separated, that's a different discussion. But in this way, it sets it up inside of your monthly payment. Now, what we're talking about here is escrow, title, basic closing costs. Remember that we're not choosing escrow and title today. These are just basic estimate numbers. And then we're going on basic lender costs. Every lender is different, whether you're using a broker or a direct lender, bank, or a different institution. Do not have this program as an available option. They may have other programs, but this program isn't one of them. This just gives you some estimated closing costs, not accurate by any means, because you are not locking your loan in today. Interest rates are all subject to change when you get your offer accepted. Now, we're going to go over the next option, which was San Diego County. San Diego County is a bit more difficult to find a home to purchase. So, what we're going to do right now is go over San Diego County, which is what we're looking at right here. In San Diego County, on a purchase price of 525 was based on a maximum income that you're allowed to make of 104,640. Based on these numbers, you would qualify for 525,000. Being able to do this would allow you to receive the $7,000. It would not cover the 2% because 2% would be higher than $7,000. You can only have one or the other, and it's never passing the 7,000. This is your down payment required at 3% at 15,750. Final loan amount at 509,250. So rate is at 6.875. APR is 7.972. Then we have a 30-year fixed, and we're doing the monthly payment at 4335. Now remember, the income that we used to do this loan was based at 104,640. What is included in the 4335? We go back to the same information that we or what is actually included in that 525 purchase price with the monthly payment of the $435. The same thing that was included in the other option for Riverside: principal and interest, taxes, insurance, mortgage insurance. Again, mortgage insurance is based at a credit score of 620. Monthly payment is 4335. Remember that there's no HOA or additional special assessments. We look at the closing costs. You got your down payment at 15,750. You're going to see that you need more money to close. So why do you need more money to close? Because the actual down payment at 15,750, you're only getting $7,000. So therefore, you're going to need about $8,750 for just the down payment. The difference down here is your closing costs. With a higher price tag brings in higher closing costs because the loan amount, the purchase price is calculating that amount. We go into the fee detail and you will see that the costs here are higher as well as the taxes, insurance. Keep in mind that home insurance when you go into Riverside County is more expensive because it is a higher fire zone. Property taxes are completely different when it comes to the area of Riverside County because depending on where you're going to live, whether it's the right side of the street or the left side of the street, your taxes could be different. Let's check out San Diego County for under $350,000. When you go into Zillow, you select some options. You can only do houses, townhomes, and condos. None of these other options are available under this program. We're not going to change anything about this bed and bath. In order to have 1% down that is required to utilize this program, you'll see that right now there's 113 options. Keep in mind that 113 options may not mean that all of these homes are actually available or that the price tags are accurate, but it allows you to be able to see that, in fact, there's some options that you could be able to find. There's 113 homes currently located in San Diego County that you'd be able to purchase with 1% down. Now, let's try Riverside County. If you did the same search of just type of home, houses, townhomes, and condos, you'd see that what is currently available in Riverside County is 679 homes as an option to purchase underneath this $350,000 purchase price. We talked about Riverside County, San Diego County, Imperial County, Yuma. Today, this program is available in all 40 plus states we are licensed in. And if you are not in California and want to do this same detail in another county, in another state, we can run those numbers as well. So what's available right now on June 13th under 525,000? We're going to make sure we have the correct ones showing. Looking at 525,000 as a maximum, if your income is under $104,604, there is 745 options to be able to purchase a home that allow you to do a house, townhome, or a condo. Reviewing the details of this program only requires 1%. The maximum you're allowed to make is 80% of area median income. If you make underneath that amount at the 50% bracket, they give you a bonus of $2,500. When you are trying to purchase a home, you are going to look at the website, Freddie Mac and Fannie Mae, pull it up by the address of the home you're purchasing. very similar to the USDA website. We're talking about the 3% down in total that you need. Where can that money come from? It can come from your own funds. It can come from a gift. You cannot receive borrowed funds, meaning that somebody else told you that they're going to give you $5,000, but you need to pay it back. That's not allowed on these programs. So they will require that it is a gift. It is your own 401k, money that you can actually verify when you're looking at how to come up with that 1% or the difference of that $7,000. Those are options for you. Today, we were running closing costs at a much higher estimate than what we typically do to make sure that you are not getting any surprises when you find your home. A lot of factors can change the final amount of your closing costs. And some of those factors are things that you cannot control. Let's say, for example, that you found a home in Riverside County and that home has higher property taxes. If they have special assessments of an additional $1,000 a year, you will end up coming up to close with more money. Let's say you end up purchasing a home in Fallbrook or Alpine. Your home insurance will be more expensive than if you purchased a home in Valley Center, Escondido, or San Marcos. Also, because of all the changes happening right now within insurance, it will end up being more expensive than it was when I ended up purchasing my home in 2007. The numbers we're reviewing are on the higher end. Closing costs are about 2.5 to 3% of the purchase price. So you can properly estimate how much you're actually going to need. Your agent is going to help you negotiate to get some money from the seller to help pay that amount. It is not necessarily a seller's market. It is not necessarily a buyer's market. There are more properties currently for sale. However, not every seller is willing to give you additional money for closing costs. It is important that you have the means to pay for those costs. Who is this not good for? People over the income limit wouldn't be able to utilize this program. For clients thinking about putting more than just the 3% down, and want to avoid mortgage insurance, this program is not your option. Clients thinking about utilizing FHA because of the less restrictive requirements. If your situation needs more credit forgiveness, maybe you don't have the 620 credit score and you just have a 580 credit score. FHA is going to be your option because it's still going to allow you to do 3.5% down payment. Keep in mind that today we were just discussing the 1% down up to the $7,000 assistance program. This is an option for many people, but it's not an option for everyone. If you are thinking about your next steps and you're ready to make that move, schedule a call with myself at callmortgageliz.com. Stay tuned because there's going to be a lot more videos about first time home buyers, down payment assistances, comparing all of them and in between. If you have questions, we are here to help you and we look forward to seeing you on our next